Welcome back, and joined by Digant Haria this morning, co-founder GreenEdge Wealth, of course, known for BFSI. So Digant, I'll start with that. How have the numbers been, and is it now a good time to probably look at private sector banks over PSU banks, given the kind of Q4 performance that private sector banks have delivered over PSUs?
Morning, Harsh. Good to be here.
Very good morning.
See, the numbers were strong for almost the entire sector. I think nothing in the sector has practically disappointed. And see, the genesis of the numbers that we saw in the last quarter was the RBI rate cuts and the easing cycle, which started in February of 25. So it typically takes around 11, 12 months for the strength to build up in the sector. Like the regulator does something, the macros do something, and it passes on to the sector. But now, if you see that, from March, because of this Iran war, there is an inflation wave, there is a wave of currency depreciation, there is a chance that interest rates, after hardening a little bit, can harden a little more. So I think while the micros are very good, okay, a lot of companies reported great results, but I think the macros are something that maybe another 3 to 6 months. We will not see a very big rally or a party in this sector unless this war comes to an end or oil comes to something like $90 or our currency stabilizes. If either of these three things happen, there is a lot of value in the financial sector. And to your question, private banks look better than PSU banks. I think absolutely yes. At this stage, private banks offer a lot of value. Names like ICICI, Kotak, Axis. Everybody. I would say the spring is compressed. They delivered good results, good ROEs. They'll probably do it in the future. But yeah, I think we need a little bit of macro improvement before this entire thing starts. So I think long-term investors, definitely it's a good time to accumulate. But 3-6 months, nobody knows. You may end up with flat returns probably in 3-6 months. But there are many other pockets, Harsh, in the sector which are doing better. So we focus there.
Kunal, private versus
the mood is little dented on the earnings of PSU banks. Do you see enough headroom or runway for many of the PSU banks now, or is they going to consolidate at this level?
No, I don't think there are any specific headwinds because see, this whole PSU banks, they rallied very, very sharply till February. It was only this Iran war and the related macro deterioration which resulted in a sharp correction. And then see, generally what happens is when bond yields go up, the treasury portfolios of PSU banks, they may register a little bit of losses. But I think, these are short-term things. It's just that the sector was too heated. SBI had a very sharp rally from 900 to 1200, and everybody else, whereas private banks didn't do much. So I think it was that build-up of the trade which got cleaned. But even today, we don't see any headwinds. I think they will also perform, but it's just that, the private banks have become too cheap, and there is nothing bad with private sector banks as well. They fell or they underperformed so much because they were very heavy on the FII ownership. Like PSU banks are not very heavy on FII ownership. So like if the FIIs come back, and which will probably happen when currency stabilizes, crude oil stabilizes, then private banks have to outperform PSUs. Nothing wrong with PSU banks. It's just that they are well valued and private banks are undervalued. So that's about it, right?
How do you look at the non-banking financial companies?
Yeah, so I think that is where there are two pockets which are shining bright. One pocket is the microfinance or the micro lending space. I think, see, that has resolutely turned around. If you look at the March quarter, almost all the microfinance companies reported very strong numbers. We think it's just the start of this good cycle in microfinance after 25 months of very bad cycle. And the cycle generally lasts for 12 to 18 months. So I think microfinance as a space offers good risk rewards to the investors, irrespective of the macros or whatever is happening in the world. Second space is the gold loan space. I think companies delivered fantastic results, fantastic growth. The outlook also remains very strong. Somehow the investors are worried that, after Modi ji's speech on gold, I think everybody is worried that maybe RBI might do something to this gold loan sector. But bearing that, I think the sector has very, very strong tailwinds, and I think these two sectors can outperform, irrespective of whether FIs come back or if the macros take a little more to get okay, because the tailwinds of the business are very, very strong.
Right. Digant, plenty to speak to you about, frankly. I'll come to you in just a minute. Metals in general, can that trade continue to unfold in a bullish fashion?
Yeah, so I think, see, the very long term, this trade seems to be, it will last for 2, 3 more years because everybody is rebuilding their factories, rebuilding their supply chains, not just India, countries in the world. And in metals, there are like, different, aluminium. I think India is blessed with, bauxite and electricity and everything. So I think aluminium remains a very good spot. But in the run up to the war, the aluminium prices have gone up from say $3,000 to $3,600. So that part is seen in the results, and this may cool off a little bit. Whenever the war is over, the plants or the factories in the Middle East restart. These may cool off. So I think near term we have had it. We have had a very good rally. Probably we have had enough. But yeah, I think the long term, the entire metal pack looks very solid. And I think in the ferrous space, which is the steel, iron and steel space, I think that space also offers opportunity. And here, we are more bullish on the mining names, names like say NMDC or MOIL, anybody who has, the mines for long term. So I think this sector is absolutely a place where one should keep their eyes on.
Okay, what we'll do is limit a very short break. Thank you for that view. Digant, stay with us. We'll come back. We'll continue to talk stocks. Plenty of movers here this morning, especially on power, on hospitals, healthcare, which is a couple of spaces which will be in focus on earnings. Stay with us.
How are you looking at Eicher? And along with that, the other two-wheeler companies like Hero or Bajaj and TVS?
Yeah, so see, the two-wheeler sector was on a roll after that GST cut, which happened, say in September of last year, and we saw very good volumes, and the sector had actually started rolling, but then again, now with this entire geopolitical event which happened, I think the metal price inflation, and slowly we see that petrol and diesel prices are also inching upwards to reflect the global reality. So I think that the domestic consumption of two-wheelers, I think this year can be a little challenging versus what the last year was. So somebody who is just domestic focused may not really do well. But I think these two companies, Bajaj has a lot of exports. Eicher is exports plus premiumization play. So as rightly you mentioned in some of those brokerage reports, it remains a secular play. Like long-term investors have very little to worry. Short-term, obviously 3, 6 months we can pass out. We can pass on without doing anything. But that's the case with so many sectors. So I think Eicher remains a good story. Even TVS is a good premiumization story in the sector. So yeah, two-wheelers maybe after a 6 month break, Diwali is something where things can light up, start lighting up again.
Okay, let me also bring on board Chandan Taparia, derivatives and technical analyst at Motilal Oswal, joining us. It's frankly packed today in terms of the panel that we have this morning. So thanks, Chandan, for joining us as well. What's the take with regard to auto, Chandan, and is Eicher at all one of those which you are bullish on?
Good morning. Thanks for having me. And again, it's an interesting and exciting day for Indian market because we need to focus on the intermarket studies. The good part is that crude has declined. However, we have seen a hit from the petrol price hike. But at the same time, the recovery in the global market is indicating some sort of positive momentum in Indian indices. So I believe the way the market has been consolidating with higher base, it should move on higher side. To comment on auto, I believe some bottom out approach could be there. Particularly on the Eicher motor, it witnessed some buying from lower levels. However, it remained underperformed in last couple of weeks, but some support-based buying can take it to higher levels. If I look at the price setup, in last 12 to 15 days, it has seen a corrective move from 74.70 to 76.50, and taking support at is a trend line. So I believe with support near 68.30, it can head towards 7200 to 73.50 marks.
Okay. For that, Karan, Let me take a step back, actually. We're seeing positive cues globally in terms of markets, Digant, as you well know. Give us a sense with regard to how you're viewing our own Indian markets and how you're looking at valuations at this juncture. Do you believe that we're attractively placed? And if so, sectors that you're bullish on or stock picks that you do currently like in a market like this?
Yeah, so I think India is doing okay. I think this, if the see whenever oil prices move the way they have moved and currency moves, I think India has, like we have to consolidate for a few months, and I think we have already seen that. So we are absolutely not negative on the markets. We believe that next 2 quarters there will be some challenges in terms of raw material supply chain and COGS and everything, but I think market is seeing through those challenges. So I think it's a fantastic time to go shopping. Even like even large caps, the names we discussed, like large banks or auto companies or real estate companies or the travel and tourism companies. This entire pack has been hammered very badly because of the war and crude oil and probably the fear that what will happen to the demand in the next 6 months. But I think there are fantastic companies there. So somebody who has patience beyond 6 months can actually look at building a portfolio in these sectors, real estate, travel, tourism, large banks, even NBFCs like Shriram or something. So those we remain positive on that. And, then there's a second basket where India needs energy efficiency, energy sufficiency. We need supply chain, we need shipping. So that whole real economy basket, that I think is a 3, 4, 5 year kind of a theme. And, some part of the portfolio should definitely be there, the power, metals, infra, energy. So I think we are reasonably bullish. I think, once currency stabilizes and FIs come back, we can actually think of a new highs by Diwali. The only caveat is, the war should not accelerate. Oil comes down below $100. And I think, we will see probably going back to old highs by Diwali or maybe after that.
Digant, short conversation, but thank you so much for coming in and speaking to us. Great having your perspective this morning.
Thank you.
All right, PNG, Railtel on order wins. Central Bank has now, government has sold 8% stake in Central Bank. So that overhang likely going away after that knock on the stock on Friday. Oil India has found new gas potential, or rather a potential new gas reserve. And therefore, Oil India will likely be in focus. And Belrise, again, on the back of numbers, a very decent set of numbers, 2,000 crore fundraise announced as well in terms of the QIP for Belrise. That one is trending lower in terms of the bias on otherwise what looks like a positive day. Bliss Pharma is up 7% in early minutes of trade, as you can see, of course, pre-open. Let me go across to Chandan. Chandan, some of the results-heavy candidates this morning, especially on the hospital side. Fortis Narayana, what's the view there?
Yeah, so we have seen buying interest in selective healthcare counter. If I look at the Apollo Hospital, that comparatively looks better. But yes, to reply on Fortis, it has seen a decent consolidation of last almost 18 days. Now with support of 945, it can head towards 1,000 kind of level. If I look at the NH, here also we witness some buying interest from lower levels. And this consolidation breakout can take the counter to higher levels. On last trading session, it witnessed a dip, but that is likely to be bought. With support of 1820, it can head towards 2,000 kind of level. Looking at the Apollo Hospital, likely to be one of the strongest hospital counter. With support of 8,200, we are looking for an upside move towards 8650 to 8700.
Okay. What's the take, Kunal, with regard to NTPC and some of the power plays? How do you play power at this point?
Yeah, I think NTPC is something which continues to look attractive. Power as an overall space, I think, has done reasonably well. For example, NTPC has been moving around the 400 mark, plus minus, 2-3 percentage points. I think 385 to 410 has been a broader range for NTPC. Tata Power, on the other hand, the stock has been moving just about that 420 mark, 420 plus minus 20 points has been the range for Tata Power. Torrent Power, I think, apparently has been one of the few stocks which has done pretty well for itself. Again, that stock at 1,500 levels looks to come back into a good risk-reward territory. So I think most of the power stocks have come back or shown signs of good strength in the first couple of months in this recovery. And then now, after a mild phase of a correction, the risk-reward starts to look attractive for many of the power names.
Kunal, if you look at some of the IT stocks, How are they looking at this point in time for you?
So I think IT as an overall space actually looks a little better than what it was maybe a few weeks or a couple of months back. Now there is a stronger wave of short covering across many of these IT stocks. The second point and the more important one is that the Nifty IT index has come back above its 20-day moving average. And there was this 3-day rally, previous week start, where you had seen the IT index moving up by, say, broadly around 6%, 7% in a matter of 2-3 days. And then post that, there was a mild correction for the IT stocks or the IT index at large, but it managed to hold on to its 20-day moving average. So that is generally considered to be positive. It indicates that potentially there could be a change of trend. However, that one trigger which I think what typically one needs to wait out for to establish a trend is the confirmation of a breakout of the swing high, which was formed in the previous week. So I think once we see that happening, hopefully in the next couple of days, if the markets see slight bit more traction, then I think there could be a very strong indication further that maybe the worst for the IT stocks, at least in the short term, could be behind. Many of these stocks would probably try and come back into a recovery mode. And even if it's been added by a layer of short covering, the minor recoveries generally get extrapolated into higher degrees if there is a wave of short covering. So I think IT is an index to watch out for. But I think it's better to just wait for that confirmation of a breakout, which could be a previous swing high. And that could be, I think, around 2% or 2.5% higher than Friday's close for many of these names.
Okay. Some movers or among some of the movers is also a Divi's Labs. What's the take there, Chandan?
Yeah, so we have noticed that selective pharma counters have really doing well, but Divi's Lab already really do well in last 9 weeks, really do well from 56.50 to almost 7,000 marks. It has been consolidating from last couple of days, but use the dips. As of now, if it comes near 6,600 zone, I think that can be bought with support of 64.24, again move towards 6,800 to 7,000. So buy on decline is advisable as of now.
Chandan, if you can also take us through some of the defense companies as well. BL, good set of numbers, good guidance which came in last week. You have HAL also is showing good traction and good margins there. How are you looking at these two companies?
Yeah, so if I look at the entire defense, yes, I'll prefer both the counter HA and BL, but we need to keep in mind that momentum is comparatively slow, good for short to medium and long term point of view. But yes, you need to accumulate. First, to comment on BL, it has been consolidating, witnessed some profit booking decline in last almost 5-6 weeks. Major support is near 400. So if any declines happens with support of 400, one can accumulate with the view that it can head towards 440 to 455. HL is negating the lower top, lower bottom on the daily chart, holding well above 50-day mark from last 3 days. However, the momentum was missing. But I believe some buying interest.
Right, Chandan, apologies, going to cut you off there. 300 points higher on the Nifty 50. We're now looking to test 24K. So it's looking like a very decent morning to start the day as well as the week. Nifty 1% odd higher is what I'm seeing. So we're seeing a slight bit of a cool off, or rather, not quite. Sub 24K is what we're still sitting on. In terms of the gainers, well, Hindalco is the top loser on the Nifty 50, 0.9% lower. So very likely those numbers already built in. But Eicher Motors 4.5% higher on Eicher